Good morning from Chicago, traders. It is Monday. Happy Monday, the 17th of May, 2021. It's 8:01 a.m. Chicago time. Just a quick sound check. Just let me know if the sound is distorted or loud or anything. I guess Friday I was running a little hot on the microphone. I didn't hear back from you. So just let me know when the sound is not perfect. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 1994. 1994. What were you doing in 1994? Let's hop right into the conversion trading pre-market summary sheet and take a look at what we have here. Overall sentiment, slight risk off. The market finished strong on Friday and has been stair-stepping down slowly back into that 4150 area. Friday's run-up was quite significant. The test that was done on Friday was quite significant. We'll talk about that in a minute. I don't want to get ahead of myself. Friday also had great volume, strong volume, and overall pretty good action, a gap and go day. We'll summarize that in a little bit. Again, I have to kind of restrain myself from getting ahead on talking about the S&Ps. But overall, seeing red across the board, with the weakest product being the Russell. Currently, the Russell is trading at 2208. 2208.7, down 14.1 points or 0.63%. The NASDAQ's off 76 points, more than 0.5% off. Crude oil pulling back to $65, trading at 65.07, down 30 cents or 0.46%. The S&P is off 16 points. We're trading in range. There was no value for Friday as it was a price discovery day or a trend day. But we're also seeing the Bund is down, the bonds are down 5 ticks, and we're seeing the 10-year notes down 2 big ticks, 4 small ticks in the futures, trading 132.11 even on the 10-year note. The dollar is unchanged. The yen is a little bit higher. Gold is upticking $7.10 or 0.39%, and silver leading the pack. You can see silver is up the strongest here. Currently pulling back, only up 19 cents, trading at 27.55 and a half, up 0.69%. The cryptos are getting hammered a little bit. Apparently, from what I'm seeing, this is the result of some comments from Elon Musk that they may sell their Bitcoin holdings in Tesla, and so on. So ETH is down 14% and Bitcoin futures down 11%. Remember, micro Bitcoin futures are now trading on the CME. Be careful. So far, that's the overall picture. And what's driving things really is a market that's pushed. Remember, last week CPI was a big problem, right? CPI came in at 4.2%, expected at 3.4%. I don't remember, but much higher than the 2% from the prior month. This is year on year, and this was a disaster, right? Oh my God, this huge inflation, and inflation is generally market positive, stock positive. Prices go up, earnings go up, but it could have deflationary consequences. But the market responded by pushing down, spiking down to 40.95.50, I believe. and the number came out at 41.31 even, still untouched in the day session. And now we have a gap down there, and turned around and rallied the very next couple days. So, and so this is where the market is. It's a very, very odd environment. I think we're seeing unprecedented challenges to the economy, to the jobs market, to governance, and the market is revealing this. But overall, what we see from the price action is they've shaken that news off, and the market has continued to proceed higher, and that's what we need to go with. The treasuries today are down, yield is higher today, and stocks are lower. So we get treasuries and stocks moving in the same direction, and yield moving opposite of equities, which is an interesting thing. So this is where we're at. The S&P has traded 213,000 contracts so far. It's still within its one standard deviation of volume, trading basically what we would expect to be in normal for the last 252 days. 213,000 is relatively normal volume. And we've got about 32 points of range from 47.25 to 78.75 in what is a balanced profile. So that's where we stand. However, note that the overnight inventory is 93% short, a little over 93% short, 93.5 at this point. The inventory is short because much of the volume that has traded is below Friday's close. That's how we gauge the overnight inventory. So we expect the market to turn up a little bit on the open. Big releases today. As you can see, NAHB Housing Market Index, Fed's Clarida, Fed's Bostic, net tick flows, and Japan's GDP today at 750. And this week in earnings, it's all retail. Target, Lowe's, Home Depot, all the big ones are announcing this week, and it's likely to have an impact on the market. So pay attention to earnings this week. There are many places where you can get an earnings calendar. So that's where we are. Let's switch over and take a look at what was expected on Friday. So Friday we came in, the market was trading at about 41.34 or so. The expectation on Friday is an open auction, likely to test lower, move lower slightly. And then I was expecting a push to 70, but the key target on Friday was 80, right up in here, 80. But given that I had given this room to 20 to test 41.20 below, 50 points of range would have given us 70, which is also a stock zone up here, and overall it pushed through. So this is our primary scenario. Remember, I was bullish on Friday, expected this to push higher, looking for 70, 80, 83. Those are the levels on your screen. Here's what actually happened on Friday. Let's cut down on the noise a little bit. Here's the entire trading day on Friday. Okay, so a nice clean open, nice open auction, pushes higher. The interesting thing is the open and the low were 2 ticks apart. There was a small bit of driving behavior there. The delta was positive right away, so there was a bit of a driving kind of push to it, and we have to keep that into account. But overall, just stalling out quite early. Opening swing at 34.75, 34.75 to 40.75. I think we opened at 35.25 actually, and then so we end up with an open auction here for the first maybe 9 or 8 minutes. And then finally, this was the chance for sellers to come in and press back to the prior day's gap, right? This is the prior day's high at 26.75. Was looking for it to push to 26.75, but actually to push through to about 20. And they had the opportunity to push lower, and they could not. So it's all longs from here. Look for pullbacks against predefined areas to get long. The first target is as listed in the trader bite is 50. Was looking for the 50 here. This is where 50 was. 50 tagged. Consolidate for a while, for about an hour, and then it starts to it dips down, and then it starts to push again. The next level up is 56, goes to 57.25, and then from here it is 70. We're looking for 70 right up here and 80 right up here. Remember the gap zone that was here from last Tuesday or so. The gap zone, some key figures from the gap zone were 68 was a key number. And then the gap zone high is 78.5. And look at what it did. It stopped at 78.25, leaving a one tick gap. By all measures, this means that the gap zone was filled for the day. And what we did is we closed that gap zone from the week before, Thursday, I believe, or Tuesday, I think, last week, Tuesday. And then we sat sideways. This is a very bullish close, technically. Very bullish close. We have a decent distribution down below. On top of the 50, which is another key area. There's a stock zone here, but up top, we finished very strong. It's a normal variation day. Pretty strong day. We breached the IB high and held near highs on the close. The expectation is it would drift up, test that 80, which is the MC point of control from April 20th up to this point, up till the day before Friday, up till Thursday. 80, 83 is a big area that we've talked about again and again and again. And we went to 78, and we have come off in the overnight session. Look at the delta. The delta is playing along like we would expect. Price and delta moving in the same direction. Once again, seems a lot more normal. And then from here in the overnight session, we open up, push higher, squeeze the 78.25 into the 78.50 gap fill, gap zone fill, and then from there it just pulls back, sits sideways through most of the session, and then we end up opening in the European session still sitting sideways, and then from there we start pushing lower. So risk off, we go back to the lower distribution at 50, and we are currently trading at 50 here. Let's turn this off. Currently trading at 50. We're at 41.55, right against the 50 area. So what we have here is a market that's somewhat trapped. We have the 80 above, which has shifted down actually with Friday's action. It's shifted down to about 72, 73. So we have the 80 above with high volume. Then we have the 50, which is the mid-century figure and a heavily traded price over the last couple weeks. And then we have the 20 below us, which represents the next high volume node. You can see it in the composite right here. You can see the high volume node here. And then from here, it's 4100 or 4104, which we dealt with last week. And then from there, it's 4067, which we tested last week. So again, the market is going high volume, low volume, consolidate, drop to high volume, consolidate, drop to high volume, consolidate, come all the way back up, get stuck at high volume at 4120, then move to 4150, then move to 4180. The market is gyrating in a very, very orderly way, and the market auction is very well organized currently, which makes it a little better to predict past performance not indicative of future results, of course, but it makes it a little easier to squeeze this market and to squeeze the runners, right? So now what we have in the composite is this blunt area where the point of control is shifting from 83, 80, 76, back to 80, 72 now, and it's going to continue. It's accepting this 4180. It is liking this area, given all inputs, everything that goes into the price of the S&P 500, all inputs into the issues that are underlying the S&P 500. We really like this 4170-ish to 4183-ish area. And so we're not pushing through the 4200 and attacking that high. We sold off pretty good on CPI last week. It spent the whole week repairing. Last week, by the way, really strong volume, about 8 million contracts, 8.5 million contracts in RTH. That's quite high, relatively high. And look at what it did last week. It missed the high of the prior week, which was the all-time high of 42.32 and a quarter in the RTH session. It missed it by a handful of ticks, and then it drops, forms this gap zone, and then tests all the way down through the 40.67. This wonderful price here, the short hold that I was talking about all week, and of course pushing through the 41.50, 41.80, and so on. And now it's built itself a nice point of control at 41.70, and we've pulled back. So we're trading inside of this bar from Friday. We have a gap zone beneath us that's quite small, but we're leaving structure. Last week, yet again, we're leaving this multi-prong profile, and what this means is the market is actively price discovering, and therefore volatility is higher, ranges are higher, volumes higher. There's a shifting of control or shifting of holdings among participants, and this is good for day trading. Remember, my time frame is day trading, a day trading time frame. So if you're here on a swing basis and you're going, oh my God, there's so much going on here, we're in the day. We're consider yourself as a swing trader. Consider yourself a bomber pilot. You have a planned course, and it's long term, and it's a long ride. And so on, and you have your defenses. Consider us, in an analogy, consider us fighter jets. We're just looking for the short fight. We're looking to protect our position. We're looking to turn over inventory. We're looking to unload our ordnance and trade both sides. Whereas a bomber departs one location, gets to another location. Once it's done, it moves to another waypoint or another target area. So if you are watching this from a longer time frame perspective, it seems like this is all crazy noisy, but we are looking for the short fight, and we have no allegiance. We're fighter pilots that will switch allegiance. We're like mercenaries. Maybe I took that analogy a little too far. So that's where we are. Notice the range from last week, quite a wide range, a lot of activity in there. This is very important. It is very likely to carry over, but also notice last week we had one-time framing end the week before, and then last week is kind of triggering off one-time framing to the short side. So if this week is not able to take out 42.31, so if we close this week below 42.31, shorts, the longs are likely to be in trouble, and the weaker hands are likely to liquidate, and there's likely to be a protection that will be required in the futures, which means selling against equity portfolios or option positions. And so we're watching very carefully what it does at the 42.31 or that area up there, anything above 4,200. We're going to watch very carefully to see what it's doing up there. All right, so That's the overall run. You can see the delta starting to turn up finally with price, and volume has been pretty strong, and the range and volume are moving in coordination with each other, and this is all good for day traders. Let's take a look at what the market is showing in terms of an overview. This is my Edge Pro X overview chart. The top row are the currencies. The middle row are fundamental products, energy, crude, gold, 10 years, and bonds. And then the RTY, these are the indices. The RTY, look at the posture of the RTY, pretty weak, digging deep into last Friday's range. Same for the Dow. The Dow is holding up pretty well. It's holding right in the middle of the range. The NASDAQ is holding up pretty well as well. It's down, but it's holding above this zipper down here that was formed pre-market and at the open between 13,260 or so and 13,200. It's kind of holding above that. It seems pretty decently strong. What's going on in the heat map? The heat map is really very, very fickle these days. The structure seems pretty weak. Let me set this back to 500. Structure seems pretty weak. Not seeing stable blocks in here. As you can see, the MBO data shows that these blocks are kind of broken up. There's some size here, not much of it, but the size is kind of broken up into little blocks. I don't have very much confidence, especially against my stock zones, that these areas are likely to see a challenge. We'll see how this changes once we open. This is my order flow chart. This is let's call it a footprint. That's a trademarked name, but the footprint has been kind of fickle, pretty thin prints throughout the overnight session. You can see there's, just in the two-digit kind of play, we're starting to make a push for it. A nice little squeeze above 41.55 now, but overall, really not seeing a lot to go off of in terms of order flow. Let's take a look at what's expected for today. Let's see. Here we go. For today's action, the big area to monitor is going to be the 78.80 still. So just remember right here, this is really important, right? 78 to 80. Above there, the next big area is the 90. Has a single print, 90 up here. That's the next big area. Below us, we're challenging this 67 area. The 67 area overnight is where we've rested. This is the top of the chop range here. That was formed on Friday, and then beneath there, we've got 41.31 right in here, 31, and then we fall into the 20. The 20. That's a big composite area. Remember, right here, you can see it in the composite. So this morning, expectation, open auction. We are in range. There is no value. The expectation is a push for the overnight point of control percent stat at 41.63. Consolidate, pull back, and then I'm expecting this to squeeze back to 41.73 this morning for the point of control, and then to challenge the 78, and then to sit sideways. This is a Monday, not going to give it too much room in terms of range. But basically, I'm looking for it to push from 55 to 70, 78, 80, and that's plenty of range for today. The secondary, the more interesting play, is an open auction that responds, gets into that 63 area, and then falls through, right? 63, 67 area, falls through with an impulse, challenges the overnight stat to the downside at 47, and then starts to run towards 31, and then a push towards 20 before the bounce. This to me is much more interesting. The short will be after the first impulse and then looking to trigger off or to scale off at 31 and 20 on the secondary scenario. Again, just remember, we're opening inside of Friday's range. We are in balance. Currently with Friday's range, we've taken back a lot of what it did on Friday, and we are kind of trading. We bounced off this early morning balance that took about an hour to form on Friday. I'll leave you with those thoughts. One of the things I want to announce to you, by the way, this Wednesday I'm doing a public AMA. The link is in the YouTube description. It's also shown here. I'll drop it into the YouTube chat. Doing a public AMA with Convergent Trading to take any questions and to talk about what making the turn in trading looks like. I've done this, as many of you know, I've run a prop shop. I've seen my traders, almost all of them make the turn, and I've seen more and more people make the turn at Convergent. Again, past performance is not indicative of future results, but I want to have an open and honest discussion, a transparent discussion as to what it takes and how much effort it takes to actually make the turn in trading and to define what making the turn means. If you want to join, please register at ft71.com/lowercase, all lowercase, CT-AMA-making-turn, or click on the link on my Twitter feed or on the link that I'll post into the live chat. Good luck, everyone, and I'll catch you tomorrow morning. Take care.